Hey everyone, me Kevin here. This video is brought to you by Public.com, an amazing stock trading app, and you can follow me on Public.com as well. If you want to sign up and get up to $70 in free stocks, go to metkevin.com/public, but more on them in a bit. So first, let's talk about this Nancy Pelosi delay, the debt ceiling, what we got to know about it, and expectations going forward for what's going on with the crazy world of Congress. First, we got to talk about the delay. Nancy Pelosi and House Democrats promised that they would have a vote on the $1 trillion infrastructure package that's already passed by the Senate. All the House has to do is rubber stamp it, essentially. They promised they would hold a vote today. Well, no surprise, Nancy Pelosi is now suggesting instead of passing the bill today, we're just going to begin debating on the bill today, and then we'll have a vote on the 30th. But she says, make no mistake, quote, "Let me just say, we're going to pass the bill this week." Well, we've heard that before. And the problem is, Nancy Pelosi just doesn't have enough progressive votes yet in the House of Representatives to actually get this $1 trillion package passed. This is the hard infrastructure package, right? So we're talking airports, bridges, railroads, waterports, waterways, broadband, and so on and so forth. Thought she had the votes. Didn't have the votes because certain progressives, especially those led by the House Progressives Committee, say, hey, you know what? We want to wait until we have the $3.5 trillion infrastructure, the social infrastructure package, lined up and ready to go. Then at that point, we'd be willing to vote on the $1 trillion package. So is Nancy Pelosi actually going to be able to get us a vote on that $1 trillion package this week? We'll see, because right now there's a lot of work to do on that $3.5 trillion package. In fact, Nancy Pelosi responded saying that it is currently, quote, self-evident that the $3.5 trillion package might end up shrinking in size to try to get the votes needed to get both of these packages done. Now let's talk about extending the government's budget and the debt ceiling. So the House passed a funding bill that would extend the government's budget from September 30th of this year to December 3rd. And would suspend the debt ceiling until December of 2022. Now, this bill has passed the House and now is sitting in the Senate. The Senate is expected to vote on cloture today. Cloture requires 60 votes, and it's a fancy way of saying closing the debate. So in my opinion, like a little trick is anytime you hear cloture, it sounds a lot like closure. So bringing debate to closure, it's just a quick little mental trick for that. But basically, that would then take 60 votes. And once debate ends, then a bill can get passed with 51 votes. Problem is, Republicans are expected not to support this bill because Republicans do not want to see the debt ceiling get extended until December of next year. So the most likely scenario is that this bill is going to fail and the Senate is essentially going to, amongst leadership, verbally counter and say, hey, bring us something that only extends the government's budget so the government doesn't shut down, but we're going to have to talk about this debt limit issue more. So now what happens if the government shuts down, and what happens if the debt ceiling isn't raised? Who stops getting paid? And why do we even have a debt ceiling? And where do we stand on this debate right now? Well, before we talk about that, I've got to mention our partner for today, and that is Public.com. Go to metkevin.com/public. And if you sign up through that link, metkevin.com/public, you could get up to $70 in free stocks. And make sure to follow me at Meet Kevin on Public because it's pretty neat. For example, if I invest through the Public app, you'll see Kevin invested in SoFi Technologies. Kevin invested in a firm. Notice 910 here. Kevin invested in a firm. It's been up pretty nicely since then. Even if I write like a comment, kind of like a tweet, don't buy a Tesla, buy Tesla. These sorts of things can be shared with you if you follow me at Meet Kevin. Public is a pretty cool platform that doesn't buy or sell your information, and it's got a really neat social media platform built into it. And most importantly, they do not use payment for order flow, which is a big sticking point for a lot of investors. So check them out by going to metkevin.com/public. When you sign up, you get up to $70 in free stocks totally for free. You'll even get slices of things like Apple or Tesla sometimes. It's really awesome. So again, check them out at metkevin.com/public. So what happens if the government shuts down? Well, if the government shuts down, you end up getting a partial furlough of literally hundreds of thousands of federal workers. You end up getting museums and parks shutting down. You get about 50, or it might be closer to like 62% of employees. Actually, yeah, it's 62%. I had it written down right here. 62% of CDC employees would get furloughed. That's if the government shuts down, which is bad. We don't want the government to have to shut down again. Now, the worst of these is the debt ceiling, because when the debt ceiling gets passed, which again, we already have, but we literally run out of money, like we can't play accounting tricks anymore, and we literally run out of money, then we might also miss our payment obligations on things like treasury bonds, which treasury bonds affect interest rates in whole lots of markets throughout the world, and you could literally, some say, see the spawning of a recession if we miss our obligations on our payments, because that full faith and credit of the United States breaks apart. That would be really, really bad. The debt ceiling is the cap on the total amount of money the Federal Reserve is authorized to borrow. It matters because we do something known as deficit spending. We spend more money than we make. This is a big financial no-no for families, but okay for governments because, well, indirectly, they run the printing press. Now, technically, we already passed our debt ceiling, but Janet Yellen has been going all out on this, trying to play accounting tricks and games to make sure we can have as much cash as possible for as long as possible. This is why we only have best estimates in terms of when we're actually going to break that debt ceiling limit to the point where we literally run out of cash and potentially default on bonds, default on Social Security payments or child tax care credits, and the payments associated with those. This is known as the X date because we're unsure of exactly where it is, but we expect it to be somewhere between October 15th and November 4th. This is going to create a lot of uncertainty. A lot of this, of course, also has to do with the fact that pandemic relief is still going out to individuals in waves. But, and this is a mitigating factor, on October 15th, a lot of income taxes get paid for those who were on extension for their 2020 tax year. And this could end up being a windfall, which would be good and would help kind of kick the can down the road a little bit longer on the debt ceiling. Right now, our national debt sits at $28.43 trillion. Our borrowing is capped at 28.4, so we're already over a little bit, but we're literally just going to run dry. We're not going to have anything in the chests anymore, so to speak, in about 2 to 4 weeks. So, at this point, some have argued, let's just get rid of the debt ceiling. Let's borrow as much as we need to. But many in favor of keeping the debt ceiling see it as a tool for limiting government spending. So really the only other modern country that does this is Denmark. But here in America, we keep it because it's really become a bargaining chip for one side to argue, hey, like, we can't do that bill or we can't spend money on that because then we're going to break the debt ceiling again. So all this has, of course, raised the question of why do we even have a debt ceiling? And it's mostly become a negotiating tool so that one side can really keep the reins on another side's spending. In this case, Republicans keeping reins on Democrats' spending because it's an actual limit that if we breach, bad things happen. And it's a great tool for trying to limit spending. Although most say, look, if we all agree to vote on certain bills and they're going to cost us a certain amount of money, why do we need two limits? Like if we're going to pass a bill, let's pass a bill and actually fully pay for it. So this is where you get arguments around the debt ceiling from both sides. At the same time, we've got Pelosi and Chuck Schumer racing to come up with a framework for the $3.5 trillion package. And we've got a lot of drama around this. For example, many Republicans are now echoing Donald Trump's talk about this bill being a, quote, fake infrastructure bill composed of just 11% infrastructure and saying that it's not real infrastructure. Now, most don't actually think that he's talking specifically about the bipartisan infrastructure package, which is mostly bridges, railroads, airports, and hard infrastructure things, big ones. We expect that Donald Trump is talking about the social infrastructure package. Now, McCarthy tries to separate this and make it a little bit more clear and agrees that the big $3.5 trillion infrastructure plan is just a big social liberal wish list. Buddy Carter, a Republican representative, didn't have anything good to say about this. In fact, he said, quote, "We have a spending problem. We need to cut up the credit card and avoid this cradle-to-grave government dependency that ruins the American dream. It's a socialistic nightmare. They're willing to shut down the government to be reckless spenders." Now, obviously, Democrats argue that we should have things like universal pre-K, paid leave and the extension of the child tax credit, along with taxing wealthier individuals more. But Republicans make the argument that it is not the responsibility of government to raise the credit limit to continue to pay for socialistic spending. He goes on to say, Democrats want to raise the debt ceiling to get through their $3.5 trillion socialism wish list. We call this the Build More Inflation Act. That's obviously a play on the fact that Joe Biden's plan is called the Build Back Better plan. Build Back Better. And so Republicans counter, no, it's Build More Inflation. Anyway, now, it's worth noting that Democrats have also expressed concerns right now, and that's because a lot of Democrats say they're just not going to support the $1 trillion bill, which Nancy Pelosi says she'll have a vote on the 30th, until the $3.5 trillion bill is done and ready to sign. But that's a problem because the 30th is in 3 days, and the $3.5 trillion bill doesn't even have a solid agreed upon framework yet amongst Democrats. Now, let's talk about expectations and try to tie this all together. So here are my thoughts. I think we're probably going to get this $1 trillion infrastructure package done and out of the way. I think we'll get it done around the same time that we kick the can down the road on funding the government, hopefully to the end of the year. That is my optimistic scenario, that we get that $1 trillion package out of the way, both sides agree on that, get it out of the way, get it funded, get going on it, and then get that budget extended for the government. Then we're going to have a talk about the debt ceiling. I don't think we're actually going to get the debt ceiling increased unless it's part of a broader budget reconciliation package, which could be that $3.5 trillion infrastructure package. But that means Congress is going to have to work day and night to get that $3.5 trillion package done and signed and raise that debt ceiling before October 15th. It's possible those could be some pretty tenuous days, and we might end up day by day going, okay, we've only got this much money left in the pot. We've got about 2 days left. We got 48 hours left before we miss our obligations. That's going to motivate Democrats really hard to get that $3.5 trillion package sealed and done. It's possible that it might be smaller, as Nancy Pelosi has already alluded. Maybe it'll be like $2.9 trillion. Joe Biden doesn't think so. He thinks that 3.5 is already a compromise, and we'll see. But everything's going to come down to the wire in the next few weeks here because we're going to be running out of money soon. So these are my expectations. Hopefully this summary was very helpful for you. If it was, make sure to subscribe. Check out Public by going to mettkevin.com/public and get your free stock worth all the way up to $70. And folks, we'll see you in the next one. Thanks so much. Bye.